In today's episode, we're going to be talking about fixed rates. Fixed rates are a very topical discussion in today's environment. With the speculation of interest rates rising, a lot of consumers are asking, should I fix or should I stay variable? And that's a very interesting question, but it's a difficult question to answer because turning your loan into a fixed rate is really a personal choice. It depends on your household budget and how you personally feel in terms of knowing the risk you run with a variable rate, knowing the comfort of making a fixed rate repayment. The problem with it all is that whilst there's speculation about variable rates increasing, fixed rates have already increased. Over the past 6 months, they've increased quite significantly. In fact, fixed rates are probably 1.5% to 2% higher than the current variable rates. So that would mean that if each time the Reserve Bank moved by 0.25%, there would need to be up to 4 to 5 increases in interest rates before today's fixed rates are competitive. But again, it comes back to a personal choice. However, there are a number of consumers that are very concerned about interest rate rises. A home loan hint to help you mitigate some of this risk is simply set your monthly repayments as if it was a fixed rate. That is 1.5% to 2% higher than what you're currently paying. This is twofold. It means that you then get used to making that monthly repayment, so if rates do rise, then it doesn't come as a massive shock to the budget or to yourself in terms of the increase in the monthly repayment. The second thing it does is if interest rates don't rise, it means that you've been paying so much more and therefore that will reduce your home loan balance far more quickly. A fixed rate does come with restrictions. Normally, you can't pay extra on a fixed rate. There are restrictions in how much you can pay as a lump sum repayment. It also means that if you wanted to break the fixed term, you are going to be up with costs, and generally those costs can become quite significant. Again, I come back to the point that it is a personal choice. You can stay variable, and history tells us that you'll win on a variable term. You can fix your rate, which gives you more comfort in knowing what your monthly repayment will be. Or if it helps you sleep better at night with all the speculation, maybe a part fixed, part variable may be the way to go. But make sure you do your research and make sure you ask your questions and understand everything there is about that fixed rate that you're looking to enter into.